I think actually similar to the rest of big tech. It's a positive. The models, the more innovative the models get, the cheaper they get.
NVIDIA's dominance in AI isn't just holding strong, it's getting even bigger. Dan Ives is doubling down on his bet, and for good reason. Many people have been waiting for cracks in the AI market, questioning whether this is another tech bubble. But the numbers tell a different story. Over the next 3 years, we're looking at $2 trillion in AI-related capital expenditures, with big tech alone spending $330 billion in 2024. If you're looking for weaknesses, you won't find them here.
The more use case, the more GPU capacity. In other words, like that's why, like that, because everyone here, and you guys talk about it all the time, like
this is a major point. Every time a new tech boom emerges, there's always skepticism. People called the internet a bubble. They doubted cloud computing, and even smartphones had their critics. But in every case, the companies leading the innovation, Amazon, Apple, Microsoft, became giants. NVIDIA is following that same pattern. The more AI models improve, the cheaper they become, and the more use cases arise, leading to even greater demand for GPUs. That's exactly why NVIDIA's market position keeps getting stronger.
Everyone's waiting for where's the cracks in the armor? Smoke, is this the AI bubble? But we've talked about this $2 trillion in CapEx next 3 years.
A few quarters ago, people were concerned about NVIDIA's ability to ramp up Blackwell production. This isn't just a chip launch, it's an entire AI computing system, and some doubt whether NVIDIA could scale it effectively. Those concerns? Completely erased. NVIDIA just reported fourth quarter revenue growth of 78% year over year, with profits soaring past expectations. Their guidance for the current quarter is strong, and the stock is reacting positively, up around 2% in early trading.
Big tech spent $330 billion this year. You could find cracks, but you're not going to find it here. And I think that's what you saw last night.
Let's put this into perspective. Not many companies in the world are growing at this scale. For a company of NVIDIA's size to nearly double revenue in a year is almost unheard of. But what's even more impressive is that demand isn't slowing down. This is not just a one-time surge, we're still in the early innings of AI adoption.
You know, in terms of really the demand, I thought Jensen was actually more bullish than even what he was a few months ago.
Daniel Ives, thank you so much.
One of investors' biggest concerns in this report was China's impact on NVIDIA's business and whether competitors could start gaining ground. But NVIDIA handled this perfectly.
We had a fantastic quarter, a terrific ramp. Nothing was easy about it. And a couple of quarters ago...
The key here is DeepSeek, an advanced AI model that supports post-training inference, which requires 100 times more compute power than standard pre-trained models like ChatGPT. That's driving massive demand from Chinese hyperscalers for NVIDIA's H20 GPUs, even with export restrictions in place. Despite all the concerns about China's impact, NVIDIA's data center revenue still grew over 90%, meaning China's contribution was also likely above 90% growth. Jensen Huang and his team have masterfully navigated these challenges, keeping demand strong while complying with export rules.
Of course, people were worried about how successfully we'd be able to ramp something as complex as Blackwell. Blackwell, people don't, maybe they just forget that it's not just a chip, but it's a whole system.
The AI chipmaker reported stronger fourth quarter profits and revenue. Sales grew 78% year over year, and the company gave solid revenue guidance for the current quarter. Joining us right now is John Venn, KeyBank equity research analyst.
This is a huge deal because competition in AI is heating up. With companies like AMD and Google designing their own AI chips, some investors feared NVIDIA could start losing its dominance. But the reality? NVIDIA is still far ahead, so much so that even in regions where restrictions limit their highest-end chips, demand is still skyrocketing for the AI systems they can sell.
John, right now it looks like that stock is up by about 2%. I know it was kind of fluctuating back and forth. What's your overall take on what NVIDIA did to answer any of the questions that were brought up earlier this year, just concerning what's happening in China and some of the other competition that's out there with DeepSeek?
I think Jensen did an excellent job of dealing with the China and the DeepSeek question, right? I think their positioning obviously is that DeepSeek R1 is the type of AI model that supports post-training as compared to ChatGPT, which is a pre-training model. And in a post-training model, you potentially require as much as 100 times more compute resources due to the ability to support, customization, fine tuning, and test-time inferencing. I think he did a great job of doing it.
Regarding the Blackwell chip, NVIDIA outperformed even Wall Street's bullish expectations, bringing in $3 to $4 billion more revenue than analysts had estimated. Regarding the Blackwell chip, NVIDIA outperformed even Wall Street's bullish expectations, bringing in $3 to $4 billion more revenue than analysts had estimated. At this point, Dan Ives sees no reason to pull back. AI spending is accelerating, Blackwell demand is surging, and NVIDIA's market position has never been stronger. The real question now? How much bigger can this get? If AI continues expanding at this rate, NVIDIA will be one of the most dominant tech companies of the next decade. Understanding leadership and competition is key when evaluating any company, and James Wang, the CEO, knows this better than most. A smart CEO is always aware of their real competitors and how to stay ahead of them. Investors should listen closely to his insights because competition isn't a threat, it's a catalyst for innovation. Strong companies don't fear competition. They use it to drive better products, expand market share, and deliver stronger financial performance.
Continue to walk the fine line on China. We think that DeepSeek has driven a surge in demand for...
This is an important mindset shift for investors. Competition isn't necessarily bad. It can be a sign of a healthy industry. If a company like NVIDIA has no real challengers, that might mean the market isn't growing fast enough. The fact that China and other tech giants are pushing deeper into AI only reinforces the massive demand for AI computing power.
By Chinese hyperscalers for H20 GPUs, they said that China's percentage of revenues has been about the same, but their data center revenues grew over 90%, which implies that the China business grew over 90%. So I think he did a great job of managing those two touchy topics last night.
The other question was what was happening with the Blackwell chip. Obviously, they've gotten more revenue than I think had been anticipated on the street by some measures. I think it was $3 to $4 billion more. What did it compare against your expectations for the Blackwell chip?
Yeah, they clearly exceeded expectations. They had previously talked about several billions of Blackwell revenues in Q4. We were modeling 7-8 billion. They came in at 11 billion. So by all means, they exceeded all the metrics on the data center front.
The question had been what happens to margins, because obviously they've had to deal with some logistics issues and some supply chain issues to get that out. It sounds like in the second half of the year, those margins will certainly improve, but what's your overall take?
Yeah, I think there is a clear path to gross margins getting back to kind of that normalized range in the mid-70s. I think if you take a step back and you look at what NVIDIA is doing with Blackwell, they're now shipping these full stack server systems with 72 GPUs instead of 8 GPUs with multiple configurations. These things are very complex.
Many analysts have raised concerns about Chinese firms catching up in China's AI advancements. Right now, China is using AI chips that operate at about 70 to 80% of NVIDIA's inference level, which means they're a tier below NVIDIA's cutting-edge technology. China has historically absorbed technology from other global leaders and adapted it for domestic production, but the real question is, can they truly compete at NVIDIA's level? The reality is that China will be a serious competitor, but it's unlikely that it will overtake NVIDIA shortly. If NVIDIA continues pushing the boundaries of AI chip design, it can maintain its lead and dominate AI computing for years. Beyond AI, investors are also closely monitoring key economic data. The Federal Reserve's preferred inflation reading, the January PCE index, is set to be released soon. Analysts expect core month-over-month inflation to rise by 0.3%, with year-over-year prices increasing by 2.6%.
There is going to naturally be a natural manufacturing yield curve associated with this. So we think the depressed gross margins here are transient in nature. So we feel pretty good about gross margins recovering here in the second half.
So NVIDIA is doing what it can do, Jensen Huang controlling what he can control on these issues, but there are still the questions of not just what happens with tariffs potentially, but what happens with export controls. And that's going to be a fine line that you said Jensen Huang has walked very well to this point. Can he continue to do that?
The big question is how much inflation still weighs on consumer wallets. If inflation numbers come in hotter than expected, it could force the Federal Reserve to take a more aggressive stance, potentially impacting tech stock valuations. While AI and NVIDIA are long-term growth drivers, broader macroeconomic factors like interest rates and inflation still play a big role in shaping investor sentiment?
I think thus far he has. Obviously we know that he had met with President Trump at the end of January. Coming out of that meeting, there was not a further restrictions in the export controls. I know there's some concerns that those controls could be further restricted, but I think that's the right policy. I think if I take a step back and think about our policy in terms of AI export controls, I think we should allow the Chinese access to our technology.
The bottom line? Competition, economic policy, and AI advancements are all interconnected. NVIDIA remains at the forefront of AI, but staying informed about market conditions, inflation trends, and global competition is essential for making smart investment decisions. Now, if you're tired of the banks and so-called financial experts giving you advice that keeps you broke, I've got something better. It's a guide I put together called Beat the Bank, and it's honestly one of the most powerful tools out there if you want to take control of your financial future. Inside, I break down exactly how the banking system is designed to keep you poor, why your savings are actually losing value, and what the top 1% are doing differently. You'll get 28 reasons why traditional banking holds you back, a full 12-month plan to build wealth step by step, strategies covering investing, real estate, passive income, crypto, and even a special type of investment account that most Americans don't know about. Overall, the guide is jam-packed with a ton of value and can fast-track you towards your financial goals. Let me make it a no-brainer for you. If within 30 days of purchasing it you don't like it for any reason, I will give you a full refund, no questions asked. So if you're ready to stop relying on broken systems and actually learn how to grow your money the smart way, click the link in the description and check it out. You won't regret it. Now, if you're tired of these so-called stock market experts blabbing about the same picks over and over again, I've got good news. I found an investing newsletter that completely blows the competition out of the water. They find highly asymmetric stocks with low risk and high reward, the kind you'll never hear about on CNBC or other major stock market news sites. I'm talking about companies like Ukrainian agri-producers during a war or Bank Handlowy in Poland, a solid bank trading at insanely low valuations. These companies aren't flashy. Many of them produce boring products or provide services in oil and gas, banking, and agriculture. But here's the thing, they make money. And by investing in stocks like these, you can too. For a limited time, they're offering a 30-day trial for just $1. But as a thank you for watching this video to the end, I can do even better. Click the link in the description and tell me your best email address so I can send you their recent newsletter for free. It comes with 5 stock recommendations as well as high-quality market analysis, so make sure you check it out. You've literally got nothing to lose.